Measuring entities' sustainability reporting. Target 12.6 aims to encourage companies, especially large and transnational ones, to adopt sustainable practices and integrate sustainability information into their reporting cycle. However, Indicator 12.6.1 counts the number of business entities that report on sustainability. Its text does not steer Target 12.6 toward encouraging entities to practice sustainability, because it lacks a target percentage for the number of entities that should report. As Gasper et al. Argue, Target 12.6 remains at the level of encouragement. Moreover, Indicator 12.6.1 does not accurately assess entities' sustainability levels. Hence, Indicator 12.6.1 poses risks, such as greenwashing, that can mislead the public about organizations' social and ecological practices. Nonetheless, the methodology and overall evaluation of Target 12.6 focus on how business entities report their efforts to advance the core SDGs. UNEP and UNCTAD set minimum sustainability reporting requirements to build a comparable dataset. They applied the comply or explain principle in the reporting methodology to encourage small and medium-sized enterprises, SMEs, to disclose sustainability information. SDG 12's implied theory of change enables country-specific commitments grounded in local opportunities and dynamics. Because of Target 12.6's incremental approach and the comply or explain principle, country-specific priorities and interests constrain progress on the SDGs. Formulation of Target 12.6's methodology. SDG 12's text reflects a business-oriented sustainability norm since the 1990s, a downplaying of government regulation to promote sustainability, leading to greater profits and lower risks for business entities. This norm shaped sustainability reporting's focus on technological innovation and transfer, while disregarding government regulations of private entities' unsustainable practices. Entities may adjust their ESG measures without changing their investment or operating decisions. Indicator 12.6.1's comply or explain principle reflects a mismatch between the means of achieving progress and the goal of progress. The means reflect formal equality, leveling the playing field for all countries in achieving the SDGs, redistributing resources and technical capacity in sustainability reporting, led by developed nations and large corporations. Without sufficient assistance, developing countries may compromise environmental and social justice to favor short-term goals. Indicator 12.6.1's methodology enables developed nations and large business entities to lead and appear more sustainable because of their technical and financial capacity to report. Large companies have dedicated sustainability reporting committees, whereas SMEs typically lack them. Thus, Indicator 12.6.1's methodology is exclusionary. Challenges in the methodology of sustainability reporting. UNCTAD requires reliable, quantitative, non-financial data verified by external evaluators. However, third-party assurance remains voluntary in most countries. Indicator 12.6.1's binary reporting classification, often supported by automated data analytics, may exclude non-standard or non-qualifying sustainability disclosures from measurement. SDG 12's qualitative nature makes it difficult for countries to measure their achievements. Entities' non-compliance with quantitative reporting exacerbates this. UNCTAD did not establish a standard for non-financial data sampling and testing, leading to high levels of variation and difficulties in country-level evaluation. A uniform sampling standard across entity sizes is also problematic. Additionally, selection bias is high among transnational companies whose supply chains span countries with weaker sustainability monitoring mechanisms. While transnational corporations report improved working conditions for employees at their headquarters, developing country workers in their supply chains face risks concealed in sustainability reports. Variation in sustainability standards and certifications challenges comparability. SMEs' technical capacity may be limited, which is justified by the comply or explain principle. Missing data undermines historical analyses. Other factors contributing to reporting variance include insufficient institutional coordination and the imbalance between regulations for consistency and diversity. Lastly, entities may reduce certain non-financial data to bills paid to contracted companies. This practice complicates measuring the water stress indicator, with significant implications for developing countries, where 90% of untreated sewage flows directly into water bodies. In conclusion, the guidance's incremental approach favors countries and entities with existing sustainability reporting standards and monitoring mechanisms. Using UNCTAD's guidance based on global sustainability frameworks used by large companies is problematic for achieving country-level SDGs and for SME inclusion. In some areas of sustainability reporting, transnational entities can exploit SMEs in developing nations without being held accountable. Both blocks reinforce trade-offs between wealth generation and social and environmental justice. Instead of applying the comply or explain principle, the custodian agencies should introduce a separate sustainability reporting guideline for SMEs. A country-level sustainability agenda should include establishing an independent sustainability committee and cross-checking sustainability reports. Nonetheless, the comply or explain principle remains significant for SMEs, while UNCTAD and UNEP enhance Target 12.6's indicators and methodology through pilot testing.
This alternative media piece is an entry to the Responsible Business and Management Writing Competition, 10th anniversary year, submitted by Danica Batoon of King's College London.